Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone. This episode is part one of Stephanie Wickham's chat with Amber Dawson, a senior financial advisor from Ally Wealth Management, located in Perth but providing wealth management advice to expats in and around Australia. Amber has been an expat herself, moving to Indonesia with her 2 children and moving back to Australia with a goal to support other expats to get the best financial advice possible for their circumstances. And there's a lot about the Australian system to come to terms with, whether you're leaving or arriving. In this first episode with Amber, they talk about the types of expat clients that need advice, what is often forgotten when making a move, managing rental income while living overseas, and the taxing of foreign income in Australia. And there's even more stuff coming in part 2, so make sure you subscribe to the podcast. Enjoy!
Hi everyone, welcome to this episode of Tax Bites for Expats. Today's topic focuses on people who have a connection with Australia, whether it's that they've lived there previously, or we're planning a return from Australia to Ireland, or perhaps are planning to relocate to Ireland from Australia for the first time. As I myself know, many Irish people have gone to live in Australia and then over the years decide that maybe they want to return home. So we've invited Amber Dawson of Ally Wealth Management to speak with us. Amber has over 15 years experience in financial planning and first-hand experience as an expat herself, having lived in Indonesia. She has various qualifications in finance, including most notably a master's in financial planning. So she's well positioned to guide individuals through the Australian tax and superannuation system, whether they're in Australia or abroad. She's based in Perth, but she joins us today for our chat. Thank you so much for joining us, Amber. It's
Thanks,
really lovely
Steph.
to be able to talk to you, especially when we manage the time difference. It's 4 o'clock in Perth, 9 a.m. here in Ireland.
4 in the afternoon.
Thankfully the afternoon. So to kick off, tell us a little bit about your background, Amber, and how you made your way into this line of work where you advise Australian expats.
Absolutely. So after doing my, applied finance degree and landing straight into financial planning, I quickly realized that I didn't have to be a nurse to look after people, that I could apply my caring nature, but through the finance realm. So financial planning suits me down to the ground for that reason, because I get to be that in the inner sanctum of people's financial world and support them through what ultimately is their life's journey to ultimate goals. And it's a lovely position to be in because you become that trusted confidant for the clients. But as the years have gone by and my career has progressed, I've now found myself in a position where those clients are evolving, and a lot of those clients are seeing opportunities abroad. And it's lovely now to be able to continue to support them as they become Australian expats in and around the world. And ultimately, from my position where I sit now, I can support clients that have assets across different jurisdictions. So whether it be someone from Australia that's moved to Ireland or a different country, or vice versa, it's nice to have someone in their corner to support them through the Australian system, because it's quite complicated.
Yeah, it is a complicated system, isn't it? I know the rules on residency in Australia are quite complicated. And what are you seeing in the industry at the moment? Are you seeing kind of a constant level of people moving to and from Australia, or what have your observations been in recent years?
Yeah, so ultimately, there's still a huge influx of people into Australia for numerous reasons. And being in Perth in particular, the mining sector still draws a crowd in terms of a way to make good money. But ultimately, when people start to earn higher incomes, then they look to how they can keep more in their pocket. And different countries offer different tax arrangements. And so it may be favourable for an Australian resident to move abroad, become a tax resident of a different country so that their income is taxed at a different rate and they can keep more in their pocket.
Yeah. Okay. So that kind of plays to my next question, which is, what are the type of clients that you usually work with? Do you find people at various stages of life? Do they tend to be approaching retirement years? What's your client base look like?
I would have thought before, particularly moving into this space, that there would have been two cohorts. There would have been the before kids, let's go on an adventure and live abroad, group of people. And then there would have been our children are off our hands, but we don't have grandchildren yet. So let's go and, have an adventure at the other end of the spectrum. But ultimately, it's everyone. And I mean, when I became an expat, I took my two children with me. And I think it's becoming more and more possible with the world becoming smaller and people becoming more attuned to the opportunities of jumping on a plane and going to a different country, not on a whim, but certainly becoming more accessible to more people. So in terms of my clients, I've got clients that are in their early 20s and have looked on overseas job boards and just taken that leap of faith. I've got other clients that said, I'm going for the adventure, but I hope to pick up work. Ultimately, visas are going to play into the ability to make money abroad. But yeah, our clients are doing all sorts of things. And then we've got clients that are planning to retire in Australia for different reasons. Our health system is really supportive. And, there's the Medicare system, and the Australian government provides an age pension to those returning to Australia that qualify. But then there's others that think, well, I'm going to live in a different country because my cost of living is going to be much more affordable. And particularly in sort of the, Southeast Asian countries and different things, it's really interesting to see how everyone's life journeys play out.
I think COVID kind of changed things, didn't it? It gave us all a different perspective on distance and the ability to kind of communicate with people, instantly. We observed that, people doing things that perhaps 10 years ago would have seemed kind of extraordinary or a little bit more like, oh, okay, it's very possible. And I suppose in terms of our listenership for the podcast and our client base as well, what we would observe as well is a subset of the clients that you just mentioned being people who may be in their early 20s and live and work in Australia. They tend to stay there for a period of time, accumulate wealth, and then want to come back to Ireland later to start a family or to see their family grow and put roots down here. And then we also have a group of people who have actually spent their life in Australia, people who have gone out when they've been younger, made their life there, and then perhaps for whatever reason, whether it be health or just in their later years, they'd like to come back to Ireland. So I know exactly what you mean. It's not easy to pin down a client type because there are so many, and expats by the very nature are interesting people.
Absolutely. So true.
Regardless of who you're speaking to, what would be the main things you see clients forgetting to do when they're moving overseas from a tax or an investment perspective?
Yeah. So the first thing around residency, and you touched on it earlier, is Australians' residency rules aren't clear cut. So you almost need to build a case one way or the other. So if you want to remain an Australian resident, you would remain on the electoral roll. You would have a long-term lease in Australia. You would have a car. But if the reverse is true and you don't want to be an Australian resident anymore for whatever reason, then you need to build a case in the other direction. So you need to make sure that those things are sorted out. And if you've got, say, private health insurance and that remains in Australia, then first of all, what a waste of money. But ultimately, the ability to decouple yourself from the Australian tax system when you want to is the first step. And people forget those steps. They just pack their suitcase and book a flight. But from a tax perspective, it's understanding what assets that you've built in Australia will remain taxable assets in Australia and what assets are able to be managed from a tax perspective to improve your situation. So I could go down a deep rabbit hole of all of that, and they're conversations that I'm having every day.
Okay. So kind of stepping through an individual situation. There's so many housekeeping things as well, isn't there, when you're leaving or moving away? It's hard. I remember when we made our move, feels never ending, the start, both the exit and the entry into the new country that you're going to. Just there, what you were saying about, keeping the lease in Australia or maintaining links with Australia. Just talk us through that. What are the issues from a tax perspective that you see clients focusing on when they leave Australia?
Yeah. So if you think of it through the lens from the Australian government, they effectively want to tax when it's due to them. They think it's due to them when they believe that someone is a resident of the country. Now, if you've got a home or a property in Australia that is available to you at any moment, being it's empty, it's not rented, and it's in your name, then the government could make a case to say, well, that's your primary abode, and that you do reside in Australia, even though you may not physically be in the country at the time. You may be on an extended holiday. Well, you've got to be a tax resident of some country. So it's important to remember that property remains a taxable asset in Australia. So if you own a property in Australia and say you do rent it out, that's a step towards, okay, well, that's not your primary residence anymore, but ultimately it will continue to be taxed in Australia. So real bricks and mortar property remains taxable in Australia. And so needs to be tax returns completed. And you need to potentially consider the tax ramifications of generating income because, as a non-resident, people are going to start paying 30% tax on the first dollar of income they have generated in Australia.
So I think what you're saying is residents and non-residents have a different sliding scale of tax rates.
Yeah, it's the same scale, actually. It's just that non-residents don't get the lower tax rates. So they've kind of had that stripped out. So they just start straight at 30%.
Yeah.
So that goes right up to 135,000 Australian dollars of income for an individual. So yeah, I mean, rent can be quite a large portion, and particularly, you've still got to consider whether there's a loan over that property and whether there's, tax deductions and whatnot, but it's absolutely worth consideration.
We often have that conversation with clients who maybe have maintained a property in Australia. And I think that's where having advice on both sides is really helpful because, and it kind of goes to show how nuanced the decision can be when you are trying to work out if you're going to rent a property out. So the point I'm making is in the scenario you've given, in Ireland, under the double tax agreement between Ireland and Australia, Ireland would have the right to tax that rental income as well, and most likely at a higher rate than what Australia does. So it just goes to show that even on the face of it, looking at something in isolation, for example, a higher tax rate because you're a non-resident, isn't always giving you enough information to make an informed decision. So working with people on both sides who can kind of guide you through both the compliance that's required, regardless of the outcome, and, an overview of kind of actually the tax outcome to your pocket on a cross-border basis. The cross-border position really does get complicated, doesn't it? And maybe just to kind of round out the point, using that point of, the family home being rented out, what other concerns would you see expats have if they're looking at renting out what was maybe the family home, if we use that as an example, when they come back? So the first one would be, like we said, obviously rental income is subject to tax in Australia and most likely in Ireland too.
I always have a giggle when clients come to me and say, we're going to move abroad, but we think it'd just be for 6 or 12 months. And the first thing I say is, let's plan for the potential for you to stay longer abroad. And ultimately that means we do need to make a decision on property because the capital gains tax that applies to property when you're a resident changes quite substantially when you become a non-resident. So as an example, if you were to have a primary residence in Australia, move abroad, your ability to be exempt from the capital gains on your primary residence falls away, and it may be prorated for the time you were in Australia. But if you make that decision 15 years after you've left, that can be a significant hit. So capital gains would certainly apply in that scenario. And then typically as an Australian resident, you would get a 50% discount on any assets if you held them more than 12 months from a capital gain perspective. And again, that's affected by being a non-resident. So planning ahead and understanding the implications of transacting on property is the other major consideration to make. Absolutely.
And is the property market buoyant across Australia at the moment? I don't stay close to the movements. What's the market like currently?
Yeah, so since COVID, we are up substantially. A property that was worth, I'm talking Australian dollars, but a property that was worth 800,000 Australian dollars would now be worth 1.3.
Wow. Okay.
So 800,000 in COVID. So in a very short period of time, property markets have considerably gone up. And it's made it difficult for people actually to move to Australia because the rental market has been quite difficult to get into. I hear reports of that becoming a little bit softer now, but certainly to try and purchase in Australia is still difficult, and there's offers over market price or off asking price on a regular basis still, and several dozens of people going to any home open, or even, when there's a property for lease, there's dozens and dozens of people. So it can help to, even lean into the professionals that can support you if you are moving, if you're looking to get into the market, whether that be a buyer's agent or a relocation specialist to help you in. But the other opportunity, of course, it provides is if you do have property in Australia, you have the ability then to tap into the equity that property has generated, right? So if you've got an investment property that's substantially grown in value, rather than, say, sell that property and cop a huge CGT bill, well, potentially you could tap into that property and release some of the equity to do something different.
Okay. And I do recall from my time there that the financial products that are available, so negative gearing and, different things like that in terms of the mortgage products in particular, they're a little bit more favourable or comprehensive than we have in the Irish market at the moment. So people would always do well to kind of have a conversation with somebody who's close to the detail there to get the best outcome, exactly like what you're just saying. So how does Australia tax foreign income or investments for somebody who's living abroad? So if you have somebody who's Australian, maybe actually let's do it through both lenses. If somebody is an Australian, they have investments in Australia and they leave Australia and they have Aussie investments, what are the issues they need to think about in terms of under domestic rules there?
If you're an Australian and you've left Australia to work abroad, as long as you go through that step of becoming a non-resident, your worldwide income ultimately will not be taxed by Australia, apart from the taxable Australian property. And when I say that, I mean property, the physical bricks and mortar properties that you can hold, at home. So beyond that, I suppose, if you say were to have an investment account, so say you had an account with shares in it as an Australian before you left, there's decisions you can make on that investment account that can affect how your wealth grows and how it is taxed beyond the shores of Australia once you become a non-resident. So it's important to understand the taxation of investments in the country you're going to. So, I'm sure that you can speak to how it would be taxed in Ireland, but ultimately what would happen if you did nothing and you purchased that investment account and those shares while an Australian resident is that the capital gains will continue to tick over. And so if you were to then sell that investment down the track, then the capital gains would be applicable in Australia and tax payable.
Okay. So is there anything that can be done to prevent that? Is that the right outcome?
I love this one because it's different for all scenarios, but ultimately you can do a deemed disposal. So a deemed disposal talks to, I want to get the wording right here, deemed pretends it happens, right? So imagine you've got an investment account and it has $100,000 worth of gain in the account. You can do a deemed disposal, which means that you hold the account, you continue to hold it, no change actually happens, but you pay the tax as if you disposed of it. And then that way you've decoupled yourself from the Australian system. The Australian system's got their cut of what they believe they're due, and you can start afresh in the next country. So the cost base is reset.
Okay. So from a kind of a global perspective, you'd definitely review that position if you were moving to a location where the tax outcome on future gains was preferential. And I think actually, even as I say that, that's quite complicated in terms of, from a perspective of coming to Ireland. The Irish Australian double tax agreement is quite old, and it doesn't take into account the provision in Australian legislation that allows for that deemed disposal. So definitely somebody kind of stepping through that would want to get advice to see if that makes sense. Is the deemed disposal something you need to proactively consider before you move, or what are the timing issues in play there?
It's definitely worthwhile considering it before you move, but it may not always be. You couldn't listen to this podcast and make a decision and apply it to your situation, because ultimately there are so many different outcomes. I've worked with clients just recently where we've decided to defer selling down their portfolio so that ultimately they can go from the highest tax rate in Australia, which is taxed at 47%. Waiting until the new financial year means that they'll be taxed as non-residents at 30% on that capital gain.
Mm-hmm. Okay. And actually another nuance, the Australian year is July to June and the Irish one is January to December. So it gives rise to lots of interesting outcomes.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.